Welcome to my YouTube channel Tech Today. Please like and share. How to earn 1000 rupees per day from share market. Every individual who comes to the stock market comes with the desire to earn well. The stock market is one of the most lucrative avenues of making money, as it provides better returns than other avenues. Most people who come to the share market ask, how to earn 1000 rupees per day from share market. But many of them fail to do so because of their lack of knowledge and experience. The movement in the share market is governed by a variety of factors that are both domestic and international. These factors are situational and not in anyone's control. Since it is difficult to predict the daily movement of the market, experienced traders target earning a fixed amount in a month, instead of trying to reach specific daily targets. Every day cannot provide opportunities for trade, and if you earn from the share market by trading every day, you might incur heavy losses due to this. If you still wish to carry out daily trade, you should practice paper or virtual trading, and if you are successful in that, you can then carry on the actual trade. Intraday trading. Investing has no limits. You can start with 1000 rupees or with 1 rupee, 0.000. There are no boundaries in capital. Since there are no restraints, there are no boundaries in earning either. In theory, the amount of money one can make from the share market is unlimited. How to earn 1000 rupees per day from share market. If you want to make money every day, you should indulge in intraday trading. In intraday trading, you buy and sell stocks within a day. Stocks are purchased not as a form of investment, but as a way of making profit by harnessing the fluctuations of the stock prices. How to earn 1000 rupees per day from share market. What are the rules? If you are wondering how to earn 1000 rupees per day from share market, given below are some strategies which can make it easier for you to earn money from stocks, if you follow them closely. Rule 1. Trade in shares that have high volume. This is the first rule in intraday trading. Always keep an eye on shares with high volume or liquid shares. The term volume refers to the number of shares that passes on from one hand to the other in a day. Since the position has to be closed before the trading hour ends, the liquidity of the stock is what the possibility of profit depends on. Always take time to be sure of the stocks you plan on investing in. The analysis and opinions of others should be paid heed to only after you have made your own. If you feel confident about certain stocks or indices, only then should you invest in them. Make a list of 8 to 10 shares you wish to target, and begin your research on these. Pay close attention to how the prices of these shares are fluctuating before you invest. Rule 2. Leave behind your greed and your fears. In the stock market, there are 2 cardinal sins you should try to avoid at all costs. Factors like greed and fear affect the decisions traders make most often. It is best if you can keep these psychological factors in check when you are making trading decisions. They sometimes cause traders to bite more than they can chew, which is never advisable. It is important to finalize some stocks and position oneself only concerning them. No trader can make profits every day. If you try to run behind that mirage, you will only end up disappointing yourself time and again. When the wind is against you, you will have little choice except booking a loss. So, as an intraday trader, you should always keep an eye on the limits and try to stay within them. Rule 3. Keep your entry and exit points fixed. Now that we have talked about the 2 factors you should never let your decisions be influenced by, let us talk about the 2 factors that will multiply your chances of making good profit. When you ask how to earn 1000 rupees per day from share market, know that the answer lies in having fixed entry and exit points in trading. These are the 2 major pillars of the stock market. As a trader, you need to identify these points accurately. It is only after you have done this that you can think of making a profit. Before you place the buy order, always determine the entry point and the price target of the stock. Price target is the price at which it is valued fairly, after taking into consideration its history and projected earnings. If the stock is running below its target price, that is a good time to invest in it, since you will make a profit when the stock reaches its target price once again, or exceeds it. Keeping a fixed point for your entry and exit will also ensure that you do not sell the shares off as soon as you see a slight rise in the prices. Because of this tendency, you might lose the chance to make a bigger profit when the price of the stock rises further. Keeping fixed entry and exit points will also loosen the grip of fear and greed, since it will take away some of the uncertainty from the process. Rule 4. Limit your loss by using a stop-loss order. One of the most important aspects of intraday trading is a stop-loss. A stop-loss is an order designed to limit the loss an investor has. You can cut down your losses by making use of a stop-loss, so you should make use of this strategy frequently. Intraday traders should swear by stop-loss if they want to avoid incurring huge losses. The stop-loss you set should be proportionate to the target you have. As a beginner, you should set the stop-loss at 1%. An example will make this easier to understand. Suppose you buy shares of some company at 1,200 rupees and keep the stop-loss at 1%, which is 12 rupees. So, as soon as the price drops to 1,188 rupees, you close the position, which prevents further loss. This can help keep your loss in check, thus making it easier to attain your financial goal. How does stop-loss work? Stop-loss is set in such a way that if the prices drop below a limit that has been specified, the trigger goes off and the stocks are sold off automatically. So, this is an extremely beneficial method if you want to keep your potential loss in check if the prices start dropping suddenly. Rule 5. Follow the trend. When you are taking part in intraday trading, following the trend is your safest bet in ensuring profit. How likely is it that trend reversals would happen within the span of one day? Making trade decisions based on the possible reversal of trends might result in profits from time to time, but, in most cases they will not.